Welcome back to the Eric Krown crypto channel, wishing you a happy healthy start to this nice Thursday morning over here as Bitcoin playing out a little bit of the downside move that we're looking off from the break of the median range on the 4-hour HPDR indicator yesterday, which was beginning a retest of the current range lows. And that's kind of where we find ourselves in the early morning hours here. So I wanted to follow up on that, a little bit of a very, very short-term time frame setup, and then also a bit more of a focus on a higher term time frame setup to finish this one out. Other than that, I want to once again humbly request that if you find this content valuable or in some way useful, or if you even just hate it, just please do consider liking and subscribing, as looks like a little bit of short-term volatility coming back into this market, which is very much welcomed. All right, sweet. Let's just jump right into it, waste no more time. Starting off right over here, I wanted to start this one off with the 30-minute time frame. Usually don't go down in these lower time frames during these sort of videos, but there is a bit of a setup going on as of right now, and it is on the 30-minute time frame. HPDR indicator, of which we do see a closure above the top side of the blue 50% of historical returns range highs, and that is going to be coupled with a decline, a very slight decline, I should say, in short-term volatility represented by the BBWP indicator right here. We see, obviously, the moving average is moving down, albeit very, very, lightly here. I think it's, which closure exactly are we at? We're at this one right here. Yes, that's where it actually did happen. Closure above, plus, decrease on the prior to the current. Yes, indeed, we have that. So that sets into motion these statistics relevant over here, which let me just double check that we're on the right time frame. And basically this would be a short-term downside setup actually. So in this case, we are looking for, hey, stop that. It looks like I just got, hey, that's not, well, we'll get to that one later. But yes, where was I before? And just interrupted myself. My little bot is doing its due diligence in the background. It's lovely. It's like a little AI just kind of working for you. Yes. Okay, so out of 50 iterations with that particular setup, did find that 36 out of 50 did play out with a downside pullback. Move. So that gives it about a 72% strike rate. Let me just make that a little bit more visual right there. And in terms of the average return for that particular one, about 171 on average, with the first standard deviation about 0.75%, and perhaps even all the way up to 267. Now, I do think that probably lines up somewhere around our current lows. Let's see, from that price point, like 150, 170. Yeah, that'd be somewhere around the lows, 22,350-ish region to 22,400-ish region on average. And of course, looking at the time on average that typically takes to play out, 10 hours. Now, just as before, as we've gone over these setups, the failure of these is just as valuable, at least in my opinion, as the success. So just because it has a 72% strike rate doesn't mean it has 100% strike rate. So on the off chance that it does fail, we can see that the average return is actually about 1.5%. In this case, that would be to the upside. So first off, what would indicate failure here? Well, we need to come back up and close above about 22,750. And if that does indeed happen, then I'd be looking for a move probably back around 23, a little bit above 23. Somewhere between about 23 to 23,100 or so would kind of make sense for that. So do keep that in mind. But until that failure condition is met, downside a little bit more likely, as you can see right there. Anyways, now I wanted to follow up on, damn it, I forgot to bring up my notes. Apologies. I need my notes over here. My notes, I don't know what to do without my notes. Let me just bring it up right here. There we go. All right, found my notes. For fuck's sake, man. Okay, so let's go back to where we were at yesterday. Yesterday, we were looking at the 4-hour and the daily HPDR indicator right here, and and I didn't really have a strong opinion on the short-term time frames. Like, yeah, we got the gap fill, we got the pullback from that, but I'm not really getting anything like super interesting off of that, except if you see a break below the range median, which was $23,000. That happened, and then a return back down to the range lows right here at 22,300 has also happened. You can see that wick like just about perfectly stabbing the bottom side of that before getting a pretty significant bounce, I'd say. Let me just see from bottom to top how much has it been. Yeah, about 2% thus far, so not bad at all. So where does that bring us up to right now? Well, this just kind of represents the overall ranges. In fact, you're going to notice that that 22,300 to the downside number is the same range low that we see on the daily as well. So that's, why it's probably going to be a strong pivot right there. But that also means, that also would imply that if we see a closure below that region, in this case, even on a 4-hour time frame, we're probably going to see a big slide to the downside. And we'll talk about, potential areas later. I mean, this indicator's given it away already. You can just remember this one right here. 21,500 would be the bottom side of the 80% of historical returns range to the downside. So that'd be kind of the next area of interest, I suspect. And I think the daily probably prints something relatively similar as well. Nope, we won't talk about that one. Too fucking far down. So I'm going to avoid that topic for right now, and we can go check out what stochastic momentum is doing at the current moment. We can see that daily stochastic momentum is actually still heavy pressure down. So momentum does favor the bears right now, as it has been since we spoke about it over the weekend. It's like, hey, if pullback's going to happen, which probably going to happen after a 50% fucking vertical move to the upside, with basically no pullbacks on the way up, then this would be the time for it, like this next week, maybe even to next week as well. But yeah, pressure remains to the downside as long as Bitcoin's closing dailies below 24,300. 12-hour time frame shows pressure down below 22,720, which Bitcoin's kind of at right now. So if Bitcoin can dig in and not fail below the current range lows, you're going to see this one slowly start to creep up again. 6-hour time frame, same thing, but pressure down below 22,850. 4-hour time frame is going to be showing pressure down below basically 23, and hourly is going to be probably up, I'm going to guess. No, it's also down, but will turn back up above 22,650 short term. So ultimately, what does that align with? Well, again, the same thing as yesterday as far as the higher term timeframes go. The more that Bitcoin goes sideways without breaking below 22.3 on a closing basis, the more and more likely this is going to start to flip back around. We're going to see momentum also just get spent, and very likely a decent move to the upside in the following in the following couple weeks. But until then, it is risk to the downside with confirmation below this region right here, and in targets that we'll talk about relatively soon. Okay, so now that we've gone through that, what pictures are you sending me over here? Also sending me pictures. Not even responding either. Please respond. By the way, if you ever want someone to respond, just text them, please respond, and a period, and in capitals as well. It works, and that's the important thing. Anyways, yes, okay, so now let's talk about the daily setup and why this is also important as of right now. Okay, so we have another daily volatility versus stochastic momentum setup baking right now. In fact, if this one might take off from here. If it's going to be bearish, it will take off from here, basically, meaning that if you are bearish, you're looking for this to break down like below the current range lows, probably before the end of this week. Very likely before the end of this week. But basically, it is this: anytime that we see daily volatility get to extreme lows, which are defined as anything below 10 percentile or more, well, that coupled with the direction of the stochastic oscillator, which in this case is to the downside, gives a high probability setup for a big move in that direction. In fact, we can go reference my spreadsheets over here, and and I've actually backtested all the setups on the daily for the short side and the long side, basically to the for full eternity of Bitcoin. In this case, because the stochastic oscillator is pointed to the downside, that does imply that there is a higher probability of a downside move. How much of a higher probability, you might be asking? About almost 69%. Very nice. Very, very nice indeed. 13 out of 19 moved in that direction with this particular setup. And how much, you might be asking? Well, the average return was about 20.5%. Some variance in here, maybe like the mid-teens on the lower end to the upper end at about 30%. 30%. I would say on this particular one, it's probably unlikely to be like a big smashing red dildo. It's probably more likely to be a smaller move relative. The reason why I say that is because we haven't really seen the volatility base off at extreme lows for super long. Like, for example, in December over here, when it's been a long time in compression, that led up to the last, 25, 26% move to the upside. But anyways, yes. So the point that I'm getting at right now is that if Bitcoin can continue to trade sideways here without breaking down, then naturally you're going to see volatility compress more. And then you're going to see the daily stochastic oscillator start to probably flip back around as well. Right now it's still going to be pivoted to the downside as long as Bitcoin's below 23,400. But you can see that it's going to start to come into this trend line over here. Probably within the next 2 days. So if you don't see it break down by then, that's going to start to increase the probability of an upside move. But realistically, it's not until next week where if it doesn't break down, where I'd say, hey, the model points to a much greater probability of an upside move. In fact, we can go reference it over here. When the stochastic oscillator is pointed to the upside, has an almost 86% strike rate for a big fall through move, with an average return of almost the same as the downside move at about 20%, basically the same for standard deviation as well, like 15% to the downside versus 26 to the upside. And over the course of like 9 days, whereas the short side, about 13 days on average. 11 days on average. All right, so cool, or maybe not so cool. I mean, it depends on your disposition, I guess. But that's probably going to do it for today's video. I should talk about this as well. Where would be the obvious short-term pivot right now? Well, Bitcoin can get back above the median of the range on the 4-hour time frame, $23,000. If you can see it start to close 4-hour dildos back above there, yeah, you're probably going to see the upside on the daily scenario that we just spoke about become a lot more likely coming into maybe like end of next week, something like that. All right, cool. That's it for today. I want to be wishing you the best as always. Quick little Bybit chill. Got a link in the description below. As you probably have noticed, 0% on maker fees for derivative contract orders for all the shit that I give them, and all about that. That is actually a pretty damn good promotion, simply because, well, it's more money in your pocket. So I imagine it's like, oh, well, all else equal, I'd probably rather have that. So fair enough. Anyways, I'll be signing off on that note. Take care, much love, and see you hopefully soon.